speakers with us today. Helmut Heppner. Helmut is actually, Paul, could we get to see the next slide, please? Oh yeah, so thank you. So Helmut Heppner, Helmut is Director of Operations at ApprovalMax, and hello, Helmut.
Hi, everyone.
And our guest speaker today is Paul Struckman, Director at Balanced. And next slide, please. So with offices in Auckland and Wanaka, Balanced offers a wide range of services and solutions for small and medium businesses, those including essential accounting, paperless office, tax advisory, virtual CFO, and many others. So as for Paul, for many years of experience in his field, including KPMG and a publicly listed company, Paul saw the opportunity to build a client-driven accounting practice with no bureaucracy or baggage, just great use of technology, expert advice from the team, and the close-knit client relationships. So before we start, please note that the session is being recorded and it will be available for download within a couple of days. We would like to encourage you to ask questions, so please don't wait till the Q&A session and post your questions right away. To do so, please click on the Q&A button at the bottom menu in Zoom, as you can see. I guess it's time to see the agenda that we are, yeah, thank you. Let's take a very quick look at the agenda. So we will start with the definition of financial controls, and then we will look at the demand and challenges that are specific for not-for-profit organizations. Then we will take a look at the change management and the transformation process, and the three components that lead to success, so process, people, and technology change. We will take a look at the selection criteria for selecting a Zero-based Trusted App Stack, and also we will take a look at an example Zero-based Trusted App Stack specifically for spend management, spend control, and optimization. And finally, we will conclude with the best practices and lessons learned. So, and there will be time for the Q&A session. So allow me to hand it over to Paul right now.
Thanks, Maria, and hello everyone, and thanks for the introduction, and thanks for everyone for joining. So, as Maria mentioned, today is establishing financial controls for non-for-profits using a zero-based trusted app stack. And personally, I love our topic today because it's using relatively new technology, and certainly in our practice, I've seen it significantly improve the lives of our non-for-profit clients, both in terms of decluttering their accounting function, but also increasing the financial control, because it's certainly been our experience that non-for-profits are quite unique when compared to other parts of our client base. So we are talking about non-for-profits this morning, but certainly most of the principles are applicable to other industries as well. So we're going to start off at a helicopter view right at the top. We won't focus on this slide too much, but just so that we're all on the same page, we're looking here at defining financial controls, and just so that we're on the same page, essentially financial controls, we implement them to protect our organization's resources and also to give us confidence that our reporting is accurate. So it's essentially reducing risk within the organization, and we've got some examples there of financial controls, accounting standards, internal policies, segregation of duties, etc. But what makes us, this particular webinar in terms of the non-for-profit sector, what makes this sector very unique when I look at other industries or other sectors, and what makes us unique is that I think it comes down to two main areas that we've noticed. The first one is that non-for-profits have a very high level of accountability, and what I mean by this is that if we were to compare to a commercial business, a non-for-profit often has extra responsibilities. So we receive, as a non-profit, generous donations from the community, from the government, and those generous donations bring with it a responsibility, especially those from the government, a responsibility to all taxpayers. And so therefore external audits are common, whereas in a commercial business, so we had an example in New Zealand where there was some fraud, for example, committed in a law firm. And so this is in the commercial environment, and $300,000 was stolen in this law firm. It wasn't from the trust account, but it was stolen from the law firm. And this firm decided to obtain name suppression to avoid negative press and therefore reduce the risk of any clients leaving them. So in the commercial environment, we've got a lot more flexibility in keeping our level of external accountability relatively low, and whereas if this was to happen in a non-for-profit, non-for-profits naturally don't have this luxury of deciding to keep certain breaks in internal control internal, and almost certainly a fraud within a non-for-profit will be made public, and donations will likely decline if donors don't trust that the non-for-profit has adequate internal controls. So within a non-for-profit organisation, internal controls are absolutely critical, and it's largely due to a very high level of accountability, but also sort of compounding this issue of a very high level of accountability. We also see that non-for-profits often have limited funding, and that limited funding needs to be prioritised to provide their core services. And in fact, if you have anything higher than a usual level of overheads, is often perceived by donors as potentially a bad use of funds. And so you'd have that comment where I donated money to save lives, not employ accountants. And so when a non-for-profit does receive funds, instead of potentially putting or allocating those resources towards internal controls or improving internal controls, whether that be through investment in finance, legal, IT, or commercial expertise, naturally that funding can be prioritised towards the actual delivery of the core services. And so these two unique demands present some very serious challenges when it comes to improving internal process within a non-for-profit. And we've got three examples here of how this can present a serious challenge. And the first one is that process change can be difficult because it does bring with it a level of uncertainty and risk. And from experience, those within the non-for-profit space are apprehensive about introducing a new process, because along with it there does come a period of uncertainty and risk, but knowing full well that if something goes wrong with that project, there's a very high level of accountability. So we've seen that sometimes projects don't actually go ahead because it's easier remaining with the status quo, because there's this perceived increased uncertainty and risk if we change or improve a process. And if that process fails or doesn't go as planned, there's a very high level of accountability that's attached to it. We also see that within a non-for-profit, spend control is central and absolutely critical. But when done improperly or manually, it can result in a significant level of overhead, whether that's chasing paper purchase order system or whether that's manually signing off invoices before payment. It can be a time. It can certainly consume a significant level of time and overhead cost. And so what we see off the back of this is that instead of taking proactive steps to improve internal controls, it usually takes some level of disaster to trigger a process review and change. For example, we've had cases where an employee did commit a relatively small amount of fraud, but there was in terms of the quantity, in terms of the dollars taken, but that in one case they had a significant impact, and so that triggered a review across the board. All these other situations that arise, and it's only due to the disaster that the risks of the current system are highlighted, and therefore process improvement is taken. Whereas ideally we would be looking at these internal controls earlier on. So just given that we don't want to wait for disaster to strike before improving our internal controls, what we'll look at this morning is essentially, in terms of improving internal controls, what are the 3 aspects we need to look at so that we can implement successful change management. And in terms of my experience, accountants or change sort of technologically focused change managers will look at process and technology. In fact, often they'll have a quick look at the process and say, this could change. Then they'll go straight to the technology, choose a piece of software, and away they go. And often the point that is missed is the people aspect, and this people aspect is becoming more and more relevant. So we certainly believe that we need to combine 3 aspects. It's the process, which is reviewing the current process versus the future state, and we'll go into that in a second. Also looking at the people impact and managing how we can manage our people change. That's proving more and more challenging. And then lastly, we'll look at the technology, and it's not exactly a linear process. In fact, it's not a linear process. But the key is that the technology piece, which often we jump into first to say, let's have a look at this app, it actually should be at the end once we've had a look at our process and our people within the organization. So just in terms of the process, we've got this is focusing on the current state versus the future states. And very simply, what we do is we draw a basic flow diagram of our client's existing process, and we use a tool called Lucidchart, which is very similar to Microsoft Visio, and it's very simple, drag and drop the different people that are involved in a certain into a certain process. For example, how invoice is approved in the organization. And what we do is we then mix in a part of the people aspect, and we take that flow chart which we've drawn, and which often we can copy forward from a prior client, and we then take it to key people within the organization to engage people early on to focus on the existing pain points within that process. So we take it to people early on and say, this is our current process. What are the pains that you're experiencing with that current process? And invariably it will be around too much admin, or it's stopping me doing my job, or whatever the normal reasons are. And also in terms of this current state flow diagram, we also look at the audits and accountability requirements to make sure that any future state we're not accidentally leaving out a critical audit or accountability requirement. This is often where I get a copy of their delegated authority to understand who has authority to approve what expenditure, for example. So like I say, we use Lucidchart to draw this basic map. And then in terms of the people aspect, we've talked about engaging people engaging people early on. And one of the key aspects that I've found with this is that we need to identify who our decision makers are very early on. So that might be the CEO, that might be, it might not be in the management team, there might be a relatively influential person within the organization that possibly knows a bit more about internal controls, and the CEO or some of the typical decision makers might rely on this person. So that we need to identify who those people are very early on, and also we need to choose an internal champion to manage this process very, very early on. And I actually use, in terms of a champion, I actually use I look for a person who has involvement in this particular, that will be involved in this process, but they will potentially block the process. So for example, if we have an operations manager in the organization, and this operations manager is has a very strong view on which software should be chosen and adopted within the organization, that actually makes a very good champion, because if you can have this person on board from a very early stage, it means that they'll essentially be an advocate through the process instead of coming in a few weeks in or a few months in, once you've done all your process and your technology decisions, and then they'll come in at a relatively late stage with relatively strong views, and they can derail the process. Also, just in relation to that people aspect, certainly notice that it's important to keep staff informed the whole way through the process, but you don't necessarily want to involve all the staff. You don't want everyone to become a decision maker, because again, too many strong views can stall a process, but you do want to keep people engaged and informed to the process. And just one last piece in relation to the people. I am focusing on it because I do believe that we don't put enough focus on this part as accountants or process type driven people that probably most of us are, is that it's important that when we do talk to staff or people within the organization, that we show how it benefits within their area. So that's going back to that process map we talked about initially, in that we're asking what are the pain points in this current process. And it's important that we can show staff how the new world will benefit their area. So for example, it will reduce admin in your area, or you will have greater access to data. And so that will give them a greater sense of control and ownership within their area. Because not many staff will care that it's simply reducing the risk of fraud. That's a relatively, that's something that's a little bit abstract. And so it's what very much comes down to how it will benefit within their area. So that's your process and your people. And then the technology is obviously a piece that we've mainly come for today. And so we'll get into more detail around the technology now, or an example of how we can put technology into a non-for-profit. So what we are introducing here is the Xero-based Trusted App Stack, and introducing this concept because in our current market there's a plethora of different pieces of software, different apps, and it can be challenging to implement these within an organization. For a simple process, a staff member might have 2 or 3 or 4 or 10 different logins to various pieces of software, and this can be quite challenging. And so it is important that we spend a little bit of time to understand what is our suite of software that works very, very well together that we can implement into the business. And so this is this concept of a trusted app stack. It's a stack of apps that we know work very well together and we can easily implement into our client with great results. So the first key is that when you look at your suite of apps, your best of suite, using this best of suite approach, is that these apps need to be tightly integrated together. We can't have isolated apps that don't talk to each other, or because it creates duplication of data, and it makes it challenging to manage. We also want to use Xero as the anchor accounting platform, and it's important that we identify and choose an anchor for the suite, so that all the other apps that we choose tightly integrate into this base solid platform, and that in this case is Xero. And what makes this foundation so fantastic is that it centralizes document management. You don't waste time looking for data, and what we essentially want is we want one single source of truth. We want to choose one foundation platform that is our single source of truth across all our other apps. And also, just as a final point, ease of adoption, critical. There's so many apps available now that I think we're generally used to adopting new apps, but we don't have the time to go through in detail, read it. I'm not sure when the last time anyone read a user manual on a piece of software. It just doesn't happen anymore. So these apps have to be self-taught for a successful adoption. So getting now into a bit more of the nitty-gritty in terms of an example trusted app stack, a stack of apps that we know work very, very well together. And this is in the spend management part of your organization. We've talked about the Xero anchor. The Xero anchor is the platform app, and this is your single source of trust, and it is an important point to note that all the other apps that you choose within spend management need to respect that Xero is your platform app. It becomes very challenging if you have Xero as your platform app, but then you have other pieces of critical data saved in other areas. It makes it difficult to manage that process, and it introduces risk where you have multiple sources of truth. So this is why Xero is, in this case, we need to choose it as the anchor, and then other apps that work very well with it. In terms of spend management, another app that works very well within this this best of suite is in relation to document collection and digitization. We've mentioned here HubDoc and Receipt Bank. Receipt Bank is essentially if we haven't used it before, excuse me, it's essentially it gives the ability to extract data automatically, and it moves the focus in the accounting aspect. It moves the focus from data entry, which Receipt Bank does for a large degree, to more data checking. So naturally, it improves anything we can do that improves data entry automatically will improve our data quality. So that's a critical stage of this part of this suite. It will be interesting to see how the relationship with HubDoc improves. HubDoc was purchased by Xero, so I would expect to see that HubDoc might take a bit more of a focus in the future. In terms of expense management, so this is around employee expenses. Historically, we've used Expensify, and that seems to work fantastic. It's got a much broader set of functions when compared to Xero Expenses. But now that Xero's introduced Xero Expenses, we might find that Xero Expenses is actually the better option because it's actually inbuilt into Xero. So again, we've got this one source of truth all within Xero. So it would certainly be my recommendation, if Xero Expenses does suit, if the level of functions does suit your organization, you would probably choose that one over going for another external app. Then moving into and this has always been the missing link until ApprovalMax came along. This is the purchase order and bill approval management, and I find a significant level of overhead in a non-for-profit is actually focused on this one line. In that historically we've seen purchase orders done manually in terms of pieces of paper moving around the organisation. We've seen the invoices when they come in from the suppliers, they need to be printed out and signed manually. And there's looking through this app, even if you do have, this app stack, even if you do have Xero implemented, even if you do have Receipt Bank implemented, and you're using, let's say, Expensify, you still need to print out all of these invoices because your approval process is manual. So even if you have this highly digital process, you still have to print out the invoices for signature if that's how they're approved. So that's where ApprovalMax sits tightly into this app stack. In fact, it becomes quite a central, we found it's become quite a central part of this app stack, just due to how tightly integrated with Xero it is. And it was actually one of the reasons why we adopted ApprovalMax, is that it makes it very clear that Xero is the source of truth. So even though we use ApprovalMax to manage the approvals through the organization, a lot of the source data is actually is within Xero. So you're always going back to Xero for your source of truth. In terms of this app stack, one of the benefits that we have found with using the bill approval management in this app stack is that it also introduces it's very easy to adopt, and that was also one of the key pieces around an app stack. If you introduce additional apps into this trusted app stack, they have to be easy to adopt. I do actually have one final piece on this slide, just in relation to workflow automation, and not to dwell on this point too much, but in some cases, apps don't talk to each other very well, but you still want to make sure that your accounting or your Xero is the anchor system. And so you can use these other apps that work in the background for workflow automation. So if apps don't work quite as well together as you'd like them to do within your organization, even with relatively low, in fact, you can have, in some cases, no coding experience whatsoever. It's more sort of drag and drop. You can use these other tools to connect your apps in the background so that they can, you can customize them essentially to work better within your organization. And so that sort of can be a little bit of a glue between the different apps if they're not as tightly integrated as you'd like them to be. So what we'll look at, so that's essentially our app stack that we found works very, very well with Xero as the anchor.
I believe it's time for a very short poll. So Helmut, could you please step in?
Yes, hello. So we have prepared a short poll, and the question actually is, in your opinion, in your experience, what are the critical parts of a trusted app stack for spend management? So what you consider are essential pieces which have the biggest or highest relevance to you and your organization. So if you could please vote, and it's a multiple choice, so you can actually tick maybe 2 if you have an equal importance. Please give us your vote and let us know what is most important for you. The votes are coming in. That is very great to see. And of course, we will share the results with you. So please make your choice. We'll give it another 10 seconds. Okay, then thank you very much for voting, and let me share the results. So we see that the data entry has significant importance to most of our attendees, and followed by the bill and PO approvals and by expense management. We do not see any votes for workflow automation. Yeah, then thank you very much for sharing your opinion and for the results. And I hand back to Paul to continue the presentation. Thank you.
Thanks, Helmut. That is interesting. Excellent. So what we're going to look at now is essentially just some of the best practices and some of the lessons learned as we've implemented these this app stack approach within our clients' organizations. And the first that we have on here is to plan first, and this is absolutely critical, and this is both planning both the initial process but also the people aspect, like I said, the decision makers and the champions. So in terms of planning first, what we generally see is that almost half the time is actually spent at that planning phase. There's only a relatively small amount in implementation. In fact, sometimes implementation is even less than 20%. And then from there, the post-implementation support might be, say, 30%. But it does depend on which people you have in the organization and which current processes you currently have, because that post-implementation might actually be 50% of the time as well, depending on the level of skills in the existing processes. So I'll give you an example of us when we implemented the ApprovalMax purchase order system, we thought we had planned well. In fact, when we introduced this particular purchase order system, it was the previous system was paper-based, so they would sign there was a very simple rule. You'd sign the purchase order before you commit to spending any money. You'd sign that purchase order, you'd give it to your manager, or if you're a manager, you'd give it to the CEO. She would then sign it. Then theoretically, when the invoice comes in, you'd match the two together, and it works like the way a purchase order system should work. So we implemented ApprovalMax because there was a very I was a bit concerned that the purchase order system wasn't working very well, and it was also consuming a significant amount of time, and it also put a significant amount of reliance on an accounting person, because essentially the purchase order system was only as good as the person administrating it. So if the finance team didn't chase up the individuals within the organization might take shortcuts, and no one would know about it unless the finance team chased up on it. So ApprovalMax purchase order workflow, bit of a no-brainer. We implemented it, very straightforward, but then it didn't take long before we had this feedback that came back, and it came back fairly strongly, that this new purchase order system was in fact useless. And in fact, it didn't do its job, which is certainly not what we wanted to hear. But what actually turned out to be the truth was that the frustration was actually caused because for the very first time in the organization's history, I believe, the purchase order system was actually now working in line with policy. People were now actually tracked from the very first time they enter a purchase order, and we know exactly which details they put in, and also then we could match it with the invoice afterwards. And so what we had actually found is that staff had found the existing process so onerous in terms of this paper process that they had sort of casually agreed with their managers that they would go around the system and sort of retrospectively raise purchase orders only when the actual invoice came in. And so there was a pretty clear weakness or break in the system, but we didn't actually know that that was the case until we had implemented ApprovalMax, and it made it very, very clear that in fact the purchase order system was broken, and now it was the first time it was highlighted. So what turned out to be a perception of this, and when we're implementing the system, what turned out to be initial comments of this system is useless, we actually found that the existing system, as it turns out, was easily to break, and I wouldn't say it was useless, but certainly a limited use. And so in this new world, in terms of the post-implementation support, we actually had to tweak our rules. We had to update the delegation policy to allow this particular user to make certain purchases without any further approval. So it was easy to change the approval process for this particular situation, but at least as a financial controller, I had certainty that the policy that I'd put in and implemented was now being followed, and I now know any variations to the normal rule. So that planning is essential, but sometimes some of these things come out of left field in the post-implementation, and so you do need to make some tweaks along the way in that stage of the process. Also, something that we have learnt early on is to find a champion as soon as possible. And I did mention that this champion is often someone who you might think might stall the project later on. And this champion is sort of the go-to person within the organisation. Where if other staff members have potential issues, they can go to this champion to try and resolve those issues as the first port of call. So if you can find that champion early on, get them on board, have them engaged within the project, then it can be it'll save many headaches during the process. Another piece that what we have used, in fact, we've done this for years, and it's fairly good common sense, but to document everything that allows you to reuse it later. So, for example, if you're going through the process or the planning stage, put it in, use software that you can copy forward workflows, for example. So using Lucidchart, like we said, I've seen people write a lot of notes in notebooks or, you know, on pieces of paper, or and the issue with doing it in that particular way, having notebooks or folders of information that you've written on, is that if you need to implement a similar project into another client, that obviously becomes, or in another part of your organization, that becomes very challenging. So we always make sure that even if it takes a little bit longer during the process, but it is well worth to document absolutely everything. In fact, one of the things that actually came out yesterday with the client, one of the key parts of documenting everything is also documenting during your process part of the planning part of the process, is to document the existing pain points for the organization. Because what we had is, it wasn't actually an accounting example, but what came out yesterday with the client is they've just adopted a new cloud telephone system, and it hasn't gone well. The implementation's been a bit of a disaster. And the CEO was talking to me yesterday, and she just said, I just don't even know why we went to implement this in the first place. Why have we even wasted so much time? It's gone badly wrong. Why do we even do it in the first place? And fortunately, I recalled from an earlier meeting, and I could, I said, well, we had a power outage and no one had phones for about 3 days. And I could highlight the risks that we had in our existing system and why we needed to introduce a new system. And sometimes if things don't go well, you really need to understand clearly why you went down this journey in the first place, so that there doesn't become a state of despair if things don't quite go the way you intend them to. Fortunately, that happens very rarely. In fact, I think I've only seen it once or twice before. But it is well worth documenting those pain points in the beginning and making sure that everyone understands why we're actually going down this track. In terms of actually implementing, so for example, ApprovalMax, also what we found is to start small wherever possible, test it, and then roll it out to a larger team. So for example, with ApprovalMax, what we would do is we would take the let's say the existing system was that the CEO and the financial controller would sign every invoice. We would keep that exact same process in the new world. And when we adopt ApprovalMax, which is very a straightforward adoption, but we'd keep the exact same simple process and would test to make sure that it works just within the bare minimum that we needed to work. And then once we've become familiar with the bare essentials, then we'd maybe expand that approval process out to, say, another team. So let's say that's the operations manager now, maybe part of the approval process. So keep it small. Once you're happy with that, then take it to another team, then introduce it to, say, the fundraising team, so that if there are any issues along the implementation, you can solve them as you go. Also, in terms of some of the best practices and lessons learned, more in relation to ApprovalMax, just given that in a non-for-profit, this can be such a time-consuming part of the process. What we essentially, we've got some points here that we've noticed that have made ApprovalMax significantly more useful, and it's a natural choice to choose if you're using Xero as your anchor. And so one of the things that we appreciate using ApprovalMax is that the approval process is automated, so we know exactly who we're waiting for every single invoice that needs to be signed. It's an automated process, and it's also kept on the surface. So what I mean by that is we can. It's easy to identify every part of the process. When you have a manual process, a paper-based process, it can be quite challenging to understand who exactly you're waiting for signature and what exact parts of the process there are. But when it's in ApprovalMax, you've got a very, very clear approval workflow. Shared accountability. This is a crucial one, and it's been quite interesting in terms of our feedback from this piece, in that what we found is that a manual sign-off process, which is very common, it's often so time consuming that it's normally the CFO or the financial controller and the CEOs. It's normally only 1 or 2 people that actually sign off the expense invoices, because it's just too time consuming having those invoices circulate around the various managers or people within the organization. So what we found is that it's essentially the financial controller and the CEO previously had majority of the accountability, but using ApprovalMax, you can actually share the accountability and have efficiently other people within the organization very easily see the invoices that relate to their area as it goes through the approval process. So one example that we did have is that a CEO would sign off this, it was a $6,000 invoice every quarter. We received a report from another organization. It was a report around market. There's a little bit of market analysis and a few other bits and pieces. Anyway, $6,000 a quarter, $6,000 a quarter. This payment was made, and she would sign for this payment to be made, and she assumed it was relied on heavily by the fundraising manager. We implemented workflow ApprovalMax, and we then introduced the fundraising manager to also sign off on all the invoices that went through her area. So previously she was actually receiving a monthly report. So she was getting some visibility, but now she was on her phone or on her email. She could actually literally approve all the invoices that related to her area. She came across this $6,000 invoice, said, I don't want that. I'm not signing that because I don't use it. Can someone else put it into their department or their area? The CEO said, I thought you were the one that was using that report. As it turned out, no one was using that report, and it actually took the fundraising manager to not want to sign an invoice not relating to her area, that it then prompted, and we pretty quickly removed this cost out of the organization because there was a bit of confusion around who was actually using the report, and this actually brought the accountability back to the fundraising manager. And so therefore, overall, they actually could identify cost savings pretty quickly. And we've seen this happen in a few times. It's amazing, people saying, I didn't realize we were paying for this. And they might have been paying for it for years. Also, in terms of facilitated audits, there's a fantastic ability to report exceptions out of ApprovalMax. So for example, if you want to understand where has someone broken the process, where's their potential fraud, there's a significant amount of transparency, pretty easy to click through, and you no longer need to chase around paper or compare your paper records to your accounting records. You can now run a report to say, out of all your invoices in Xero, who has edited one of them. And there's a lot of transparency around where have there been differences from what was signed off to what is eventually paid, which in most existing systems can be quite challenging to achieve. Another point is improved data quality. We've talked about this a little bit, and this is going back to that previous point around shared accountability, and that if we can get business approvers engaged early on in their spending, and so to review and approve their spending, it naturally improves the spend control within an organization. So if a business approver, let's say the operations manager, she arranges for, say, electrician to do some work on the building, if she can review that invoice on her phone or on her emails or on the web browser within, say, a week of actually doing the work and being able to sign it off and being documented that she's viewed and approved that invoice only, say, a week after actually receiving the invoice, you're most likely to get a much better outcome than if you're going to wait a full month. Eventually the CEO gets an invoice, has to sign it manually. She doesn't actually know if the work was completed or not, and there's this big knowledge gap between the CEO and some of the operations, whereas you can improve the data significantly by having these invoices shared with business owners early on. And also, I have touched on it before, we found that the ease of adoption has been fantastic. There's very little training required. I think with ApprovalMax, what we found is that majority of the time is in the planning stage. There's also a chunk of time in the post-adoption stage in case we need to tweak any of our internal processes. But the actual adoption and actually training people within the organization to use the software, very straightforward. In fact, often you don't need any training at all. You just need the very basics. So the ease of adoption in terms of is definitely made it one of those apps that we're starting to rely on very heavily. So that's been our experience, and we've certainly found it's made a significant impact to our clients' organizations, and it's been able to remove a significant amount of time out of their day. So what we've seen, for example, we adopted ApprovalMax within a school where there was about, I can't remember how many teachers had to sign off on their various areas, but that in-house accountant managed to save 1.5 days a week chasing around approvals around the various teachers, for example. So what I'll leave at this point is some question and answers. So I'll pass it back to you, Maria, and so that we can go through some question and answers. I'd love to hear from anyone with a question.
Yes, thank you very much, Paul. So actually, let me take the lead at this point. And so please remember, if you move your mouse over the Zoom window, you will see a button which is labeled with Q&A. If you click this button, a small window opens up. That's the best place to type your questions. If you want to take the opportunity to ask Paul, and you may have a question about his experience in this area. So we would be very happy to receive your questions. So the first questions are coming in. Actually, it's Paul is asking Paul. Paul, what do you feel is unique about the charities compared to commercial clients? So what makes them so special, and what makes the difference?
Excellent. That's a very good question. What we've found in terms of a commercial client versus a charity or a non-for-profit is primarily around the high level of accountability within a charity or a non-for-profit, and that every part of the process, every part of the process is needs to be tracked and auditable with an audit trail to a much higher degree than what we find in similar sized organizations that are commercial. So for example, if you've got, let's say, 6 business shareholders in a commercial business, and you have a spend approval process, they might rely on, you can make commercial decisions on whether or not certain expenses are put through, because you know that there's no external accountability. It's only within your group that you need to be accountable for. So if you've got expenses for so certain expenses you can make a call to include, whereas if you're in a non-for-profit, you need to have a much more robust audit trail and a much higher level of transparency, so that if there was ever a charities services review, or if there was ever an external review, which seems to be more and more common, that you are completely ready to be able to have an audit trail for every decision that was made. And this level of accountability seems becoming more and more prevalent, and so that's probably one of the key areas. And the other area I have found is that often in a commercial space, if you wanted to hire a commercial manager to, let's say, analyze your subscriber database, just as an example, you would just make that decision if it makes financial sense. But that decision can be more complicated in a charity or a non-for-profit because it's essentially increasing the overhead within the organization. So you can be sometimes limited to introducing certain skills within the organization because it will increase your overheads within the organization. So we've seen that with a non-for-profit, one of the challenges is that there seems to be a little bit of a skill shortage. In fact, in some cases, a significant skill shortage in that accounting, IT, legal and commercial experience space, and that can make it, that really compounds the problem for this high accountability, because often there's not necessarily the skill set within the organization to manage that high level of accountability. So I think that's probably, we found one of the biggest differences compared to a usual normal commercial environment.
Yes, thank you very much, Paul, for this detailed answer. The next question we got from Simon is asking about if you have any experience of best practices about managing approvals in line with delegated budgets. I think before you talk about best practices, let me just add a note. In terms of budgets, you may know that ApprovalMax has a feature to validate spendings against a given budget. This is a feature which is in a beta stage. So if you want to make use of the budget feature, please ping us and request that we activate this feature for you. It is still in a beta phase because we are taking still feedbacks about how it needs to be designed and how our customers would like to see it. So we are hoping that we are releasing it soon, maybe by early next year. It will be then generally available, but currently it is a kind of hidden. So if you want to make use of this budget feature, please give us a ping on support@approvalmax.com. Yeah.
Yes.
Paul,
So I guess on our side, we're definitely looking forward to this function being more available in ApprovalMax. But in the interim, what we've found is that getting the business owners involved in the actual approval of the invoices early on and making it very, very easy to load purchase orders so that the finance team or the finance person can see very, very early on which expenditure, what expenses the various managers are committing themselves to. And if you have anything outside of a very, very simple purchase order system, you can almost be guaranteed that the purchase order system won't work very well. So from experience, until we see this functionality a bit more bedded into the ApprovalMax system, we found that getting business owners involved early on in the actual signing of the invoices. We also make sure it's very, very simple to load a purchase order, and also, so that just brings with it a level of financial awareness on the business owner's perspective. We then have our monthly report that we then, for each area, we have a manager's monthly report, so they can always track their actual expenses versus actual expenses versus what their budget is. And we also have a conversation every month. We try to get to everyone, every manager every month, but sometimes every couple of months, to understand what are they expecting to spend through to the remainder of the year. So we always know what have they spent year to date, what do we expect to spend going forward. And we've actually found that ApprovalMax actually helps with this process because managers are just generally more aware of what's moving through their area of the business. So when it comes to predicting the next, say, 3-4 months, so that we know that they're spending within their limits, they're actually more financially aware. So that's actually one of our biggest, the reason why we've adopted ApprovalMax, certainly within our organization, is it's actually overall increased the financial awareness within the organization, and that really does help with managing spend.
Okay, thank you very much for the great answer, Paul. And we got another question, which is also very interesting. And it is actually if you include purchase orders as a commitment in the management reporting. So if, or say how ApprovalMax can actually help to get a greater and broader visibility in the commitments the organization is doing.
Yes, that's actually it's actually a really good a good question. And what we've actually found is that purchase orders have worked badly in all organizations that we've worked with, and from the very small to the large, purchase orders just work badly. And so the first stage is actually just using ApprovalMax to get people used to putting in purchase orders, and we didn't want to act as a policeman from day one. So that we wanted the habit to be there to use the purchase orders regularly. But certainly that's our plan. Our plan for all our clients that use purchase orders is to have it actually in the management pack, so that we can understand which areas are over their purchase orders, who's putting purchase orders in too late, all those type of exception reports to understand how we're committing for expenditure going forward, but also where we've got weaknesses in our organization where the purchase order system's not been followed properly. But like I said, what we've actually found though is that because historically they've worked so badly, the first step is actually just to well and truly embed purchase order, the mentality of purchase orders in the system, in the organization. And then the step two is exactly what you've suggested there. It will be to introduce more reporting into the actual management pack so that there's a full accountability for purchase orders. But our experience is that purchase orders haven't been used well in the past, and they're more a finance function than a management tool. But we're certainly looking to change that in quite a few of our clients.
Good, thank you very much for this information, Paul. Let me just add one sentence from my side. ApprovalMax obviously helps to get a broader visibility into the commitments which the organization makes. So normal reporting would maybe see only the data once they hit the GL. But it is actually worth to know the commitments before a supplier invoice needs to be paid and hits the GL. So that is an area where ApprovalMax delivers great benefits to get a broader visibility earlier into the spend process. Okay, I think we are nearly done with our scheduled time, and I would like to thank you, Paul, at this point for your presentation, for all the knowledge you have shared, for the experience you have shared, and I hope our audience, our attendees find it useful, and it was providing some value and benefits. Thank you very much, Paul, for this.
Great, thank you. I've enjoyed it. I hope everyone's got something out of it.
Yes, thank you very much. And thanks to our audience and the questions. So it's been great having you here today. So looking forward to our next webinar in a couple of months. So we will be continuing this spend management topic and financial controls and introduction of finance optimization and controls topics. So stay tuned.
Good. Thank you very much. Have a good evening, everyone. Bye-bye.
Thank you. Bye.